Warren Buffett had his annual shareholder meeting with Berkshire Hathaway yesterday, and he dropped some bombs, some absolute nuggets for us as investors to understand. I mean, honestly, one of the things that I tell people that are starting out in investing is to read his essays. The Essays of Warren Buffett is one of the best books that I've ever read, and it's just a compilation of all of the different letters that he's written year after year, talking about different things throughout the stock market. In this shareholder meeting specifically, he definitely eased a lot of tension with a lot of investors as long as you understood what he said. So in this, there was two huge takeaways that I got, and so I want to go over those and then maybe highlight a couple other things that are important and why Berkshire Hathaway remains one of the top holdings in my entire portfolio. So first and foremost, this is a question that a bunch of people have been asking me because they know that Berkshire Hathaway is one of my favorite stocks and one that I believe in long term. So yesterday I put out this video showing how Berkshire Hathaway has actually beaten the S&P 500 long term, and in my opinion probably will continue to do so. A lot of comments that I got on that video were, though, when Warren Buffett either passes away or gives up leadership totally, how's the stock gonna do? Well, we're gonna get our answer very, very soon, because the first huge takeaway that I got from his meeting, he's actually stepping down from Berkshire Hathaway at the end of this year.
But I think it's the time has arrived where Greg should become the chief executive officer of the company at year end, and I want to spring that on the directors effectively and then give that as my recommendation. Let them have the time to think about what questions or what structures or anything they want, and then as the meeting following that, which will come in a few months, we'll take action on whatever the view is of the 11 directors. I think they'll be unanimously in favor of it, and that would mean that at year end, Greg would be the chief executive officer of Berkshire, and I would still hang around and could conceivably be useful in a few cases, but then...
So now what does this mean for the stock? Obviously, Warren Buffett is one of the best investors to ever do it. So a lot of people have a lot of faith in him picking companies and stocks to run through Berkshire Hathaway, and that's why people have been investing so much in it. So obviously, with him saying that he's gonna step down, this is a big shock, and it might be something that does cut down the stock price just a little bit. So I'm interested to see what happens on Monday or this coming week. The thing that he did that was so smart, though, was that he didn't leave it up to chance. He knew that he is getting up there in age, and had he passed away, rather than do this handoff at the end of the year, that stock would have plummeted. So again, he is just huge on strategy, understands business, understands the sentiment of the investor, and we're all gonna be a lot better understanding and knowing that this is gonna happen in the future, and so the handoff should be a lot more smooth. I believe that this is still gonna bring the stock price down just a little bit, along with some other things that they said, missing a couple of earnings and missing a couple of other numbers. But overall, I see this as something that I've been saying for quite some time. The person that's going to be taking over in leadership is named Brk.B, and he's been with the company for quite some time. He's actually been in this role at leadership within Berkshire Hathaway and making his own decisions for quite some time as well. Warren Buffett's been doing this handoff for a long time, even before Charlie Munger passed away. And I believe Berkshire Hathaway is in great hands with Brk.B. The other thing is that Brk.B is going to be inheriting this company with so much cash off to the side. A record $347 billion is there, and who knows if Warren Buffett's going to use it or use part of it by the end of the year. We'll see how things go. But either way, Brk.B's coming into this point where the company's incredibly healthy, lots of cash, and it's already a solid company. This would be kind of like in sports. If you were to inheriting a team where you already have some of the best players in the league, but then you have a whole bunch of money to go out and buy even more of the best players to make that team even more stacked. I believe that this is a very, very solid handoff, and I think that we have some big things in store. The other huge thing that we learned from this, from Warren Buffett, and my takeaway number 2, is that what I've been saying all along is exactly what he thinks. Yes, we're in a little bit of a market dip right now, and yes, it's been uncertain times and the tariffs are not any fun, and he did have some comments on how he doesn't believe that the tariffs should be happening and that it's not a great thing or a great look anywhere, but that's besides the point. The main thing that he said is, yes, we're in a dip, but this is not unnatural. Also, we need to zoom out a bit. Overall, we're down like 6 to 8% over the year. Yes, there was a point we were down like 12% S&P 500, but we can't freak out week to week. We need to be able to stay calm and stay steady and understand that this happens. Market cycles happen. Hear what he has to say here.
The first quarter ended March 31st, and it did show that Berkshire's cash pile expanded from the end of the last year. But the greatest market turmoil came in April. Martin Devine, a shareholder from Scotland who is attending the meeting today, wants to know, has the recent market volatility presented Berkshire with opportunities? And Martin just wrote in an addendum in the last 40 minutes or so, pointing out that you mentioned Berkshire almost invested $10 billion recently, and wanting to know if you could talk more about that.
Well, then, I can give you a good answer to the second part, which is no. But 10 billion wouldn't have done that much, you know. That's the other side, another side of it. What has happened in the last 30, 45 days, 100 days, whatever you want to pick up, whatever this period has been, is really nothing. There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a very short period of time, 3 different times. Nothing was fundamentally wrong with the company at any time, but this is not a huge move. The Dow Jones average hit 381 in September of 1929. It got down to 42. So that's like going from 100 to 11. This has not been a dramatic bear market or anything of the sort. I mean, it was, you know, like pointed out, if I've had 250 trading days a day, you know, for however many years I've been old enough to trade stocks. Got 17 or 18,000 days. There's been plenty of periods that just are dramatically different than this. I mean, when the day I was born, the Dow Jones was at 240. And that was August 30th, 1930. And between that and the low, it went from 240 to 41. I mean, if people think that it made a really major change, it didn't. If it had gone up 15% instead of down 15%, people think they take that with remarkable grace. but if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy.
Understanding that, what he just said, and then also seeing that the company itself is looking into things like AI and other companies that are going to be distressed or beaten down badly because of all that cash that they have. I just think, like I said at the beginning of this video, there's a lot of room for this company to grow and it's in great hands. So I'm definitely bullish no matter who's at the helm, because I think that Warren Buffett set this thing up for success for many, many years to come. In this video that I just did the other day, I actually talk about Berkshire Hathaway and go deeper into the actual fundamentals and the company's numbers. It actually beat the S&P 500 and consistently beats the S&P 500 while also being one of the safest things you could put in your portfolio. Watch that video or this one, keep you going strong in your investing. Remember to keep investing simplified.